Welcome to Rich Roots. In this episode, we'll uncover popular commercial real estate assets that are growing and what passive investors should look out for.
Hey, Radhika. Hey, so I was thinking a lot about asset classes and what asset classes mean. I was thinking back about my journey in how I first discovered multifamilies, and I think for you it's pretty similar. What do asset classes mean to you?
Well, asset classes are essentially like groupings, I would say, of the different types of real estate investments. So I think of it like sectors within real estate. A couple maybe big ones that folks usually have heard about are multifamily, like you mentioned, but there's other ones like self-storage, industrial, retail, office, senior living. So there's a whole bunch of them. And I think today we should talk about five of them, some of the ones that are growing in our market today. And we could also talk a bit about our experiences and, of course, for our passive investors, help figure out what are key things they have to keep in mind as they start looking at these different asset classes.
Yeah, I think that sounds really good. Do you want to kick us off with multifamily?
Yeah, absolutely. So for me, like when I was starting to look at commercial real estate, multifamily just made sense. It was also the one that was, I think, most vividly around me, right? Like I live near Los Angeles and there's lots of high rises here, lots of smaller apartments, bigger apartments. And so it was just easier for me to just comprehend as I was getting into a new space. So multifamily are, anywhere between 5 and higher units. So they're essentially apartment complexes, and at 5 and above is what you consider kind of commercial multifamily. Things that I loved about this asset class was the demand, right? So the demand right now is heavily driven by our affordability crisis. So I think most people know we as a nation are making less than we used to in like the 60s and 70s, and that's primarily due to inflation as well as our cost of living just rising over the last several years. So with that, what comes is, a bigger gap between what people can afford and where they choose to put that money. So for me, it was about consistent demand or growing demand, especially in certain markets. And also knowing that people always need housing. It's not something that's going to go away. It's not a fad. It's not a trend. So just knowing that level of like stability that housing creates in people's lives for me was a no-brainer in why I chose to invest in this area. From your experience, like since we've also personally like talked about multifamily, like what are some of the things that passive investors should know when investing in the multifamily asset class?
Yeah, that totally makes sense what you said about scalability. And in terms of passive investors and what I wanted to know and what I thought was really insightful when you had first told me about this was you need to know the location. So I know that currently markets like Dallas, Houston, there is an oversupply, which might be impacting rent and growth. And especially when we saw COVID and some of those rates coming out of COVID, we saw a lot of people financing those multifamily assets with variable interest rates. And what that really means is that your current economic situation can significantly impact returns because if those rates fluctuate and they fluctuate for the worse in the sense the percentage goes higher, your returns might not be looking so good. So there have been a lot of instances where the underwriting on a lot of those deals that we saw, 2, 3 years ago, they didn't account for the higher mortgage rates that we're seeing today. So those really put all those investors in a bind because those properties might be losing money. They're not able to give those promised returns. So something that I personally like understanding is whether it's a fixed term rate or a variable rate in the deal that I'm looking at. And then California is home to me. So something that has also been top of mind is things like insurance, right? We see a lot of wildfires in this area. Recently, Southern California got impacted. A couple of years ago, it was Northern California fires. And you're seeing a lot of insurance agencies cancel insurance plans. So what are the risk? What are some of the natural disasters in that area that I'm looking at investing in? Texas, for one, has an increase in property insurance. So things like that, as we're seeing like the natural disasters and the landscape shift a little bit in terms of how those insurance rates are, that's just something to keep in mind. So I think that was a pretty good like high level overview that definitely when I started, that gave me enough to, get my wheels turning and start looking a little bit more into it. One big thing for me is, making sure that your operator, your GP team is picking something in a high demand area, because if there's demand, then there is a need. And that means that there is like a valid business plan. So I guess thinking about those large buildings, another thing that you mentioned when you were kicking us off is industrial real estate. So what does that mean exactly?
Yeah, I actually love industrial properties, and it's primarily driven by a few things. One is just the growth of e-commerce, right? So you think about Amazon or other online retailers, they're going to need warehouses to ship, store and then ship their products. I think over the last several years, we've seen significant growth in e-commerce, which means there's more demand for things like distribution centers. The other thing I think about when we talk about industrial real estate is just longer term leases. You're not going to see leases for annual lease. You're really going to see things between 3, 5, sometimes even 10 years, sometimes even longer, just depending on the operator. So that really helps to make sure your cash flow is steady, it's consistent, and depending on the company or who you lend your asset out to, their qualifications, they're probably not going to be moving around from like one warehouse to another. So there's just a lot of like security and stability that comes from being in the industrial space. I say that according to CBRE, industrial real estate has seen a 10% growth in 2023. And vacancies, again, going kind of along what I was just saying, vacancy rates are still historically low, around like 4%. So it's a very strong market. And I think we're seeing even further demand from last mile logistics with companies like Grubhub and that sort of thing.
I'm beginning to see how low maintenance these properties are. So I think in multifamily, where you've got to deal with tenants, right, in people, I really like that in this asset class for industrial, they're longer term tenants and you're dealing with bigger companies. So you're not actually dealing with that individual person, but you're dealing
Mhm.
with another operator of things. So I would expect that the maintenance costs are also low, as well as turnover being low. So yeah, this is great. I'm learning something new in terms of this being more stable. But I'm curious though, how is it cost wise?
Yeah, I think, well, so it's industrial, it's a giant warehouse. So it's definitely more capital intensive, which means you are going to need a bigger chunk of money to invest up front, but the returns are stable and can be more predictable. So I think it's a really good asset class for someone who is thinking about capital preservation, right? They want to continue their capital growth, but they're not looking for super aggressive growth. Like it's not going to be crypto, right? So um and like that should not be the expectation. Of course, don't jump in without doing your own research, and just like any other asset class, find a solid operator who has a good track record. And I think that's really what makes or breaks the deal.
Yeah, I think we're in it for the long-term returns here.
Yeah.
Yeah, that gets me thinking about just, other warehouses that might need a lot of land and a lot of space, and that brings me to self-storage. What do you know about this? This one is pretty interesting. I've heard a little bit about how this is a great investment, but
Mhm.
I've never invested in self-storage before. I've briefly looked at it, so curious to know about your thoughts here.
Yeah. So I thought it was really kind of funny, right? Self storage is people basically making money off of storing other people's junk. We are like a hoarders nation. So I think the more I learned about it, the more I saw how recession resistant self storage really is. People always need storage during major life transitions. So that's could be things like moving to a new location, moving to a new home. There's periods of time where, we've personally, like my family and I, we've used self storage. And most of the time it was, we were moving from one apartment to a home and we needed a month or 2 months of, storage space. But I think it's really outperformed a lot of other real estate sectors, especially during economic downturns.
Yeah, it definitely is a hidden gem as I started looking more into it. I think that the demand was actually super high during the pandemic. Like you said, a lot of folks were moving and they didn't necessarily want to get rid of their stuff, right? Because it was like a period of just uncertainty. You wanted to be with your family. And so, according to JLL, I saw the statistic that there was an increase in average rental rates in 2022 at 7.5%. So we're seeing a 7.5% increase year over year in self-storage, according to this statistic, which I thought was really high. And I think one of the reasons for this too is it is substantially cheaper than buying furniture, moving it into another place, or like trying to sell it on secondhand stores. From a business perspective, for folks who run this or operators who run this, they're selling pre-subscriptions. So usually the longer you keep something in storage, the cheaper your monthly rate is. But most folks just need it for a few months for those like transitionary periods in life. So that's where they're making the most amount of money, but it still ends up being a good deal for someone like me who's actually used self-storage also when I was moving. And it was much cheaper to go that route than it was to buy furniture all over again. And also just more convenient too.
Yeah, I think exactly. And I think maybe something else to just remember as a passive investor, just be very sure of the location that you are investing in because it's really vital to be near a high demand area. And I say near because you really don't want to be, within it necessarily or right in the center of that high demand because you want to make sure your storage facility is big enough, it has enough units. Again, thinking about economies of scale and scalability, you want to have enough units that can truly provide that steady cash flow. And you want to really make sure you are near a major highway or a connection to the city. All right, Vibha, so let's talk about one of our favorite asset classes, senior living. You want to give us an intro on that one?
Yes. So senior living is near and dear to both our hearts, I guess, because it's something that, full disclosure, we personally have invested in and also have run deals as GPs on this. So I think one of the reasons that I think this asset class just makes sense is because the baby boomer population is growing. And we all know that people are living longer, which is amazing, but we're also seeing a lot of aging diseases that come with that, with the shift in just family dynamics. And I can speak for myself, growing up in an immigrant Indian household, I think it's very common for in our culture to see elderly live with their kids. However, in the last couple decades or so, that's not really the case. You might be close to your parents and you might be close to your community, but as much as I love my mom and dad, I don't really want them living in my house, and I don't think they want to be living in the house with me as an adult. So, so I think what we're seeing a shift in just adjusting to how we're aging. And so we're seeing a lot of folks consider senior living as an option as they're getting older. We're looking at by 2030, the US population over the age of 65 will increase to nearly $74 million, uh, which is really projected to be like at a growth rate of 5 to 7% annually, according to the National Investment Center, which is basically this organization that does all these studies for senior living. What are some numbers? Yeah, what are some things that you personally are looking at when you evaluate this asset class as a GP?
Yeah, so I think so. You spoke a lot about the demand side. I think the supply side is just as exciting, right? So the NIC, which was the National Investment Center that you also referred to, they've actually done quite a few studies, and just in the last quarter of 2024, they published a study that said the average occupancy of senior living as an asset class across the nation is 87%. That is huge. 87% is occupancy. That means there's very few senior living facilities that currently exist where uh, there's a lot of vacancy. That's incredibly high. I think as the demand continues to increase here in the next 5 to 10 years, we're just going to see more and more facilities closer to that 90% occupancy. And that's great news for passive investors who want a steady cash flow. I think the other piece to think about is because these facilities are already near full, we will have to see some new construction come in place in order to meet the demand that's coming. And NIC actually projected that in order to meet the demand that's coming, the current pace of new development would have to increase by 3.5 times. Frankly, I don't think that that's really going to happen unless, there's some significant incentives from the government, tax abatement, or other types of strategies to incentivize builders to go and do that. So I personally love it. I also think there's just, a place in my heart where this is like an asset class that really makes a social difference. So it's not just about providing housing, it's also about providing care. There's an entire business and healthcare around this asset class. So there's a huge reward at the end of it, but it's also risky because you really can't just go into it with a pure real estate mindset. You have to go in with an operator who understands the state, legislation, the regulations of managing a senior living facility, understands things like license, even like Medicaid. It is a fairly specialized asset class, but I think there's tremendous growth here. One other thing to just call out, right? Because of the type of growth we're seeing in senior living, a lot of operators, a lot of GPs, a lot of funds are jumping into this asset class. But I think like as a passive investor, you really want to make sure your operator has healthcare experience. I have seen several deals that have come, across my desk where the operator is just another real estate person. And like, while that's good, there are some specific considerations in how to run this business. And again, as a passive investor, just vet them out. I think a little bit more due diligently than you would for like a multifamily.
Yeah, that's a great call out.
All right, so let's talk about our last asset class, Vibha. Let's wrap it up with our future-proof asset, data centers.
Oh my gosh, yeah. With AI, this one's growing so fast. You have cloud computing, G, all the things tech related. So data centers are where all your favorite streaming services, social media platforms, cloud storage platforms are basically keeping your data. They are literally the backbone of the digital world, and there's just not enough of them. So according to the CBRE, I saw the statistic where data centers are expected to grow at a rate of 7.8% annually through 2025. And that is something like over $500 billion of growth from 2025 to 2029.
Wow. So these properties are definitely long-term investments. They all come with very strong leases, many with strong and major companies like Google, Amazon, Microsoft, and many, many more. I think a few things to keep in mind because this investment class is very different than a lot of the others. There is, of course, a growing demand for tech infrastructure. Greatest data centers are a really good way to add some future-proof diversity to your portfolio, but I think there are some considerations to keep in mind. The business model, the way that you really get money through this is you either invest in a syndication where the general partnership team is actually buying the land. So you buy the land, you work on the land, you develop the data center, and then you lease out the data center to these companies. So the rental income from that lease is really where your profit or your revenue is coming from. I think few things to keep in mind from like a risk perspective as you're evaluating deals are you have to be very strict on the type of location you're looking at. So data centers require a ton of electricity and water. One of the major risks of having a data center is actually how do you cool it. So things like power cost and having reliable energy supply is vital. You also want to be very close to things like the fiber optic routes, and you want to think about the network connectivity of the location that you are choosing or you're evaluating. Two other big ones to think about are if the government of that particular state or that city is giving any tax incentives. especially given the type of growth that data centers are having. And then also just access to qualified technical talent. So just like in a senior living facility, this asset class is not just a real estate play. So there is, an operations side to it, and you really need somebody who understands electrical engineering, mechanical engineering. You want to have people who have specialists around connectivity. So there's quite that goes into building and then operating a data center, and you want to, again, make sure that the operator you're working with has specialized knowledge.
Yeah, I think with the growing demand, this is really just a great asset class to be looking out for and considering as future-proof play in portfolio building.
Totally. So let's wrap it up. So I think regardless of which asset class you choose, I think remembering that each of them have their own risk and reward. The key is to really find one that fits your risk appetite and your investment goals. Multifamily and self-storage are a little bit more predictable and they offer a little bit more consistent cash flow, whereas industrial and data centers are I would say a little bit more risky, but there's a huge growth potential. And senior living is high reward, but really requires the right operator in place.
Yeah, exactly. And I think to your point, you can always mitigate risk with the right information and education. So as we're looking to diversify, it might be essential to mix things up or, start with one, maybe something a little bit more predictable and stable like multifamily, and then switch over to either data centers or industrial for something else for long-term growth. I think that was a wrap for today's discussion. We seem to have covered a lot in like a high level, and hoping that, I would love for us to just sit down and kind of break these asset classes down a little bit further as we deep dive into other episodes later in this season.
Yes, that is the plan. So we hope you feel more confident in your real estate journey with an overview of the asset classes, and catch us next time.
This content is for informational purposes only and is not financial advice. All investments involve risk. Do your own research before making decisions.